Hello, participants. We'll give everybody about 1 more minute or so to join in before we get started. Okay, welcome to our webinar today, put on by Christianson, and I'm Tony Singh. I'll be your moderator. I'm the firm administrator here, and today our goal is we do want to have some good interaction with you. So for the next half hour or so, you're going to hear from our presenters, and then after that, we'll have a chance for you to ask your questions in our chats, and we'll move along to answering them. From a housekeeping perspective, if you haven't used GoToWebinar before, we have a little guide for you on where to find that chat of your question feature. So that pop-out happens from the orange arrow on the side of this, usually found on the side of your screen. And you'll see that there's a question box, and you can go ahead and type in there. Make sure to hit send or it won't go through to us. And that's where we'll be able to see your questions when we get to that part of our presentation. So as things come up for you, feel free to chat them in. Maybe along the way we've answered them. So if you want to save them until later, that's just fine too. So today you'll hear and be able to ask questions of our team on PPP, HR. We have our payroll specialist, a manager on the line as well. And we just hope that you'll see our team as the resources you need today. So with that, let's get started with their first presenter.
All right, thank you, Tony. Good afternoon, everybody. I would like to recognize Tony. Thank you for helping out putting this presentation together. I'd also like to recognize Melissa Knott, our marketing manager, for assisting with the marketing efforts here. My name is Bradley Peterson. I'm a partner here with Christianson. And first of all, I'd like to say, wow, what a ride this has been. You know, it feels like we've been dealing with COVID-19 pandemic forever. It's hard to believe it's only been 2.5 months. It started on March 13th, 2020, when the president declared a national emergency that started basically a new term called shelter in place, which we've all know has just about shut down our entire economy. Within a week, the Treasury Department announced that our tax filing deadline was going to be extended from April 15th to July 15th, 2020. And so that gave us a lot of time to start working on and studying this PPP and the EIDL that was issued as part of this. Excuse me. A week later, on March 27th, the president signed a $2 trillion coronavirus relief bill, and that's how we have the CARES Act. One aspect of that was the payroll protection program, which was funded first with $349 billion, which ran out in 20 days on April 16th. About 7 days later, they added another $310 billion to that, and we're still sitting with about $150 billion of that left to be loaned out. Current estimates show that there are 4.5 million loans outstanding, totaling $510 billion, and that's through 5,400 lenders. And I want to take a moment and give special thanks to all our local community bankers that were involved in this processing these loans for our community. You know, talking with them, they've been very busy, working long hours, trying to get all these things processed. I know it was a race to the finish on the first $349 billion. I remember calling bankers saying, how much money do you think is left? How much money do you think is left? Trying to get those last few clients of ours within there, but they worked and got them, most of them done, and then we were very excited to have the extension extension with another $310 billion. Excuse me. If we were actually having a presentation here on site, I'm pretty sure we'd be giving a standing ovation to those bankers for putting all those loans together in such a short period of time. And they did an exceptional job getting all those processed and satisfying all our client needs. Certainly our firm was heavily involved in assisting our clients, obtaining funding and answering questions, basically making predictions as to how the program might play out. I guess, why do I say predictions? Because subsequent to issuing this program, there have been over 48 frequently asked questions issued that basically have left more questions than answers. That brings me to my next point. What's next? The loan forgiveness piece has been something that has weighed heavily on our minds for quite some time. We've been dealing with the issues, trying to debate, how do we apply this and what's going to happen next. I think the best thing that's happened in the last, or at least in the present time, is dealing with the simple math issue. Everybody remembers how we calculated the loan. It was based upon 2.5 months of payroll and eligible expenses. But the forgiveness was based only on 2 months of payroll and expenses incurred and paid. So, I mean, technically it was 8 weeks, but you can see there's a slight math problem there for forgiveness of the entire amount. Congress has finally done the math and they figured out that there's an issue there too. And so they need to do something to keep our economy moving, keep it going along. And on Thursday of last week, the House actually passed a bill that would extend the 8-week period during which the funds must be used out to 24 weeks. Now, of course, the Senate is also doing their math and kind of trying to figure that out as well. And looking at the issue, they're currently proposing 16 weeks of funding. So there's a slight difference between the two bills, but I think it's imperative to understand, what does that mean? Knowing that they're planning on getting together in the next week, the Senate is to pass their bill. At some point, it looks like there's bipartisan support for providing some additional extension on and easing some of the restrictions. So maybe it makes sense right now to be a little bit patient and basically hold on and wait for maybe a week before making any final decisions related to how you might want to expend that or incur additional costs to get the full forgiveness. What else was passed with the House bill last week? The House wants to increase the forgivable portion of non-payroll expenses. Currently it's 25%. They want to increase that to 40%. Also, should be noted that the Senate has come out and said they agree with the 25% and intend to hold it at 25%. The House bill also increased the repayment period from 2 years to 5 years and extended the rehiring deadline for the employees from June 30th out to December 31st. So giving us a little extra time and making it hopefully more palatable for everybody to be able to take full forgiveness and to work through the issues there. So the Senate is set to convene next week, and hopefully with what finally gets passed between the two, it sounds like there's something going to get passed. I think it probably pays to have a little patience at this point, at least be watching the news for the next week. So that would be my recommendation. I think that's where we're at. What's next? And I think let's get deeper into the forgiveness calculation. Obviously, there's a lot there, and I'm going to bring in Jamie Goddess. Jamie Goddess has been dealing with small businesses and small business issues. He's our finance manager, and so I'd like to call on Jamie to give his presentation on forgiveness calculation.
Thanks, Bradley. I really appreciate that. It is a real interesting time to see what is going on in the legislature, to see what they're going to come up with for an end result. So we're just going to kind of wait and see. But in the meantime, we thought we'd at least get something together and show you the meat of it, and hopefully not too much has changed, and if it does change, hopefully it's for the better, and we can kind of give an update, you know, as those new rules come out. So we do have just a small agenda for you today. Again, put together, we're going to talk a little bit about the application. We're going to talk about the actual forgiveness period, as there's a lot of questions around that. The forgiveness amount, fairly cut and dry. There's about 3 different ways we'll talk about. There's eligible payroll and non-payroll costs figured into that. Full-time equivalency, or FTE or FTEE, full-time equivalent employee. A lot of questions in that, especially with some of these businesses out there who have, you know, part-time employees or seasonal, or, you know, how do we get our people to come back? So that's always been an interesting one. And then there's also some documentation that the lender and the SBA is going to require that you submit with the application. And then again, like Tony and Bradley have said at the end, we're gonna have a little Q&A, and hopefully we'll be able to answer more specific questions related to individuals or businesses. I'm gonna jump right into some general guidelines, general knowledge of this whole PPP forgiveness. Again, your loans in excess of $2 million will be audited, is what they're saying, by the SBA. The SBA also has the right to review loans of any other amount. So they are taking this fairly serious to make sure that there are the companies that got the money or the companies that should have got the money, and, you know, using it properly. There is a separate box on the application because, of course, anytime you come up with a program, you got to have somebody audit that program. So there is a separate box on the application that you will have to check if it is over 2 million, and maybe some more hoops you have to jump through on the audit side. Once you do submit your application and documentation, lenders do have 60 days for the receipt of the application and documentation to review. Now, the SBA also has 90 days after that to review the lender's decision on loan forgiveness. Now, if you've worked well with your lender and you have a good relationship and you have good documentation, which is going to be a big key to the forgiveness piece, I don't think you should have an issue if you and your lender agree on what needs to be forgiven. I don't know that the SBA is going to be able to come in and override that, but there is a chance they could. And then again, the borrowers may appeal within 30 days of that decision if they choose to or have a reason that they don't believe the outcome. Again, some general payroll costs. Again, this is stuck since day one of the 75% or more needs to be payroll costs. No more than 25% can be used for non-payroll. And again, like Bradley had said, there is legislation to make that a 60-40 split. We'll have to wait and see what happens, but at the moment, we're still at a 75-25. Employees are still capped at 100,000 annualized salary. That hasn't changed. Again, so that is a 15,385 max for the 8-week forgiveness period. And that's no matter how you slice the pie, no matter how you do the math. It's 1923 a week or a max of 15,385. And again, so we're going to highlight some of the forms, the calculations, and the documentation. Again, that'll be presented later on in this webinar. Most of this presentation, again, is going to deal with a lot of the businesses, a lot of the small businesses. There is some individual and self-employed sole proprietors that have some special rules, and we'll get to those also. So again, PPP forgiveness application. The actual application is available on the SBA.gov website. It is a fairly lengthy form. It's 11 pages total, but there's really only about 3 pages that you actually have to fill out, but there's a lot of guidance on it. Some of it's gray and some of it's pretty black and white. There's also a loan forgiveness calculator out there on the AICPA.org website. They have put together a fairly detailed Excel calculator that helps you, I guess, come up with how you're gonna request this forgiveness and full-time equivalent standards to see if there's any reductions on those. It's a pretty intense calculator also, but it does have a lot of detail on it. It has a lot of notes to here's what you fill in here, here's what you fill in there. So If you'd like to try and fill something like that out, it will definitely help you with the application. Otherwise, the application also has its own notes. There are other calculators out there. We've just, so far from what I've seen, this AICPA calculator seems to be the most detailed and probably up to date. I believe that is as of like 5/15, they put that out, 5/15/2020. Again, with the application along with the proper documentation will need to be submitted to your SBA lender who actually processed your actual PPP loan. That is where all the documents will have to go to. There was also some rules in effect at the time of borrowing that will probably need to be followed, through this loan process. There is been questions on the EIDL advances, and those advances, if you did get an EIDL in advance, from $1,000 to $10,000, I believe, that will lower your forgiveness amount. And it has a separate line on the application where you have to put in that advance, I believe the number and the date also. So that will reduce your forgiveness of the PPP loan. They kind of did that and rolled it all into one at that time that the EIDL came out with that loan also. I'm going to get a little bit into the forgiveness period. The forgiveness amount, forgiveness amount. The amount, again, is the lesser of three things. The lesser of your loan amount, obviously you cannot get forgiven more than your loan amount. Payroll divided by 75%. Now this is an interesting calculation, especially for some of the businesses that maybe haven't had a lot of payroll in the last couple months. That number is going to be substantially lower. And you have to take the lesser of these calculations. Now, if you can calculate your actual forgiveness amount, and this is just a simplified calculation, obviously this is it is more detailed on the application and on the AICPA calculator to get this, but this is just the basically general overview of how they're going to come up with that forgiveness calculation. Well, one of these three amounts is going to be the maximum that you're going to be able to get forgiven. And again, 100% would be the max. But I think businesses that have shut down for any period of time or have really lowered payroll are going to have a hard time, even with the 75/25 getting to the 100%. Owner compensation, independent contractors, sole proprietors, and general partners. Again, you're going to be really limited on this side of the ball. It is pretty cut and dry from what I've seen. Is if you're over $100,000, you're going to be limited to the 15,385 or 8/52 of your 2019 compensation, or what you originally calculated. Now, again, this is going to be interesting for sole proprietors or independent contractors, because if you got the max amount of $20,833, you only get forgiven up to 15,385. There's very going to be very hard for a sole proprietor or independent contractor to maximize out and get forgiveness of 100% of their loan. That is so far just the way the rules have went, because again, independent contractors, sole proprietors, general partners in a partnership are not allowed the cost of their own health insurance and retirement plan contributions to calculate into that payroll cost. So the majority of your owners and stuff do not have, let's say, the non-payroll costs like the rent and utilities and stuff like that. They just usually don't have that. So it's going to be a lot harder for those folks to get 100% of it forgiven, unless they, again, change some of these rules that are currently in place. Eligible payroll costs. A lot of the payroll costs, again, gross salary, gross wages, gross tips, gross commissions, and bonuses are to be included in that payroll cost. Again, with the $100,000 maximum for one individual on the salary. Now, the interesting thing is they do talk about COVID pay or hazard pay or bonuses for people who, let's say, have been working through this or attempted to, keep some hours or whatnot. That is allowed under the current rules, that if you did pay a bonus or a COVID pay, hazard pay kind of a thing, you can include that in your gross payroll costs. Now, again, also considered in the payroll costs is going to be your employer contributions for your health insurance, retirement plans, and then there is some state and local taxes that you can possibly get included in that. Most of that's going to be your state unemployment, unless you have a local tax that possibly could be included on there also. I've not seen any other guidance on the discussion of like a employer-sponsored dental, long-term disability, or any other benefits included in this calculation. So right now, I believe it's just health insurance, retirement, and potentially some state unemployment or local taxes. Non-payroll costs. Again, all these costs have to be established before February 15, 2020. So you have to have some kind of agreement in place prior to that to get that included in your calculation. Mortgage obligations, there's an interest only portion of that is forgivable. And again, no prepayment is allowed on the mortgage side. Now you can take some interest on, again, the mortgage, and you can take interest on some vehicle loans or personal property loans, things like that. It's probably going to be a pretty small amount, but it all depends on your business. It might be something to at least look at to see if you want to include that in there. Rent, lease obligations, again, it's real or personal property. They basically classify it as a business rent or lease payment. So if it's used as part of the business, so if it's a lease on a building, if it's rent on a building, or leasing a car, leasing a truck, those types of things would be included in that rental and lease obligations. Utility payments, again, really got to keep good notes of this. Some of these are included in bills, some have one bill for three things, and some have separate bills for everything. But basically electricity, gas, water, and a transportation, which is a little gray area, telephone, and internet. Now they do include cell phones in the telephone type payment, because as you know, today's technology and stuff, I mean, cell phones are just a common practice in businesses nowadays. The transportation, again, a little more of a gray area. They say you can use fuel costs for transportation as part of that. Gets a little more of a gray area, and it's just tracking. I just strongly suggest any of these non-payroll costs that you're going to attempt to include in your forgiveness, document it. Make sure you document it. Make sure you're able to prove everything you've spent this money on for the non-payroll costs. It's just going to it's going to pay dividends in the end to have really good bookkeeping on this. And again, all these are meant to cover this 8-week repayment period. There's a lot of things out there that say, well, maybe I can sneak, extra payments in there. Well, there's no prepayment on the mortgage side for interest or anything. You cannot do any of that. Now, there is some gray area. It does not specifically rule out that you cannot prepay leases or rents. Now, I would just err on the side of caution. I believe if you start prepaying 5-6 months of rent just because you have extra PPP money, maybe that might not be the best way to go, and it might come back to haunt you in the end. Now, it doesn't say you can't do it, so I'm not going to say 100% you can't do it. It's just be very cautious when you get into prepayment of utilities and rent, because I think, especially the way they've looked at these last rulings, I think they're going to look at some of these and go, well, there isn't really what we intended. They didn't intend to, at the moment or in the beginning, they didn't intend to have everybody have 100% forgiveness. I don't think that was the intent. Otherwise, there wouldn't have been the whole rules to do it. It would have just gave you the money and said, thank you very much. So I think I would just err on the side of caution. Again, the non-payroll costs, maximum of 25% of the total forgiveness. So you really got to see that fine line to be maxing out the 25% if your payroll does not cover as much as it should. Okay. Full-time equivalent employee, FTEE. Again, based on a 40-hour work week, that is calculated weekly and is rounded to the nearest 10%, capped, of course, at 1.0. You can not have more than one full-time employee per person. There's also a simplified method, which is a 1.0 for employees that work at least 40 hours per week, and a 0.5 for all others for borrowers is an option for borrowers. Now, again, you can calculate it both ways, and you can surely use the most advantageous method that pertains to your business. I like the simplified method. It seems like a lot less calculations. It seems like you would just grab your employee list and be able to calculate that fairly easily, other than dividing hours by 40 and trying to come up with 0.8s and 7s and 5s. You'll need to track any employees with 25% or more reduction in salary. Now, this is going to come into play because there's some potential reduction in the forgiveness if you have not restored hours or wages from the base period is 1/1/20 to 3/31/20. And I believe you have till the end of June, but you need to get those people, if they were employed January through March at a capacity, you need to get them back to that capacity to not have a reduction in the forgiveness. The one good thing that came out of the last ruling was counting employees. So when an employee is terminated for cause, voluntarily resigns, or reduced hours during that 8-week period, they're counted as an FTE. So it does not hurt you. It does not hurt you. And if that position was filled by a new employee, it would still be counted anyway. You can't count 2, but you still have 1. But at least they do not reduce, come into the calculation for the reduction on the loan forgiveness. So I think that was a bigger thing. I mean, I don't know a lot of people that maybe, left a business because there was no work and they had to go work somewhere else because maybe they didn't qualify for unemployment or some other avenue. But at least you don't have to replace all the people you lost if it was for a certain cause. And again, a borrower may also be excluded any reduction in the FTEE headcount if the borrower in good faith makes a written offer to restore hours or salary. Now, the employee can accept that and come back to work. In that case, you're good to go. If the offer was rejected by the employee, as long as that is documented, the borrower needs to maintain that document of any offers and rejections, and also notify the state unemployment of a rejection within 30 days. If the borrower does that, that does not reduce any of their FTE headcount. Again, this is meant so if an employee, there's been a lot of discussion on, well, what if the employees won't come back to work because they're making X amount on unemployment or just don't want to because of their situation. If they reject the work, they're not eligible for unemployment because I believe there's a box that states right in there when you apply for unemployment benefits that you've not turned down work. And so if you turn down work and you try and claim unemployment, I believe you're going to be in trouble, but I will leave that to our HR professional to answer those questions. But I believe that that's why this is put in place, to give the employee or the borrower at least an option if the employees decide not to come back to work. All right, FTE reduction safe harbor. They did put a safe harbor rule in place, basically that the borrowers from the reduction based on the FTE employees, if they met the following conditions, they met both of the following conditions. The borrower reduced its FTE employee levels in the beginning of February. So if you started laying them off before this and ending April 26, 2020, and then restored it to its FTE levels no later than June 30th, then you should be good, and you've restored your pay period or pay levels to the prior level. You should be okay, and that's a safe harbor, so you will not have a reduction. You will not have a reduction for that anyway. So basically gives them a little bit more time for the economy to get back open, all these businesses again to really start hiring their people back. And again, like Bradley was talking, I believe this may be extended just to give employers more time, as it's not, the company isn't, or the country is not opening up as fast as we probably had thought it would be. Okay. Documentation. Tony, I got one question. We're missing 2 slides. And I don't know if that is, if they're just gone or it's just my fun time. But I certainly may go into documentation, but if you could look and see if you can find there's a PPP forgiveness application and a forgiveness period. If you could find those, I will start with documentation.
Yes, I'm going to pause my screen for a moment here while I look through those, guys.
Okay. Documentation is going to be a big key with this whole thing. I mean, your bookkeeper is going to be your best friend in this scenario, because it's going to take a lot of documentation and verifying, so your lender's comfortable with what you're using for a forgiveness, the SBA is comfortable with what you're using for a forgiveness, and everybody is supporting the documents that they have. Again, you need to submit the actual forgiveness application and the supporting documentation. It needs to be submitted to your lender. You'll also need documents verifying your number of FTEs and pay rates. A lot of these will come from like your 941s, your state income or payroll or unemployment reports. Now, a lot of those probably won't have pay rates on them, but I'm sure most people are in a, QuickBooks or Sage or another type of business software that they could probably run those reports out of and get those pay rates along with those employees. So there might be some reports that you have to run onto your computer system. Otherwise, most of them should be from your quarterly payroll processing. Documents for other payroll costs. Again, payment records for the employer contributions for your health insurance, your retirement plan, canceled checks if you have them, if you do stuff, ACH or direct deposit online, any kind of banking activity showing those statements. Again, just to verify that these were the costs incurred during this 8-week forgiveness period. You also need documentation for the non-payroll costs. Again, canceled checks, payment receipts, transcriptions of accounts, again, bank statements, those kinds of things. Now, depending on your relationship with your lender and how long a lot of these non-payroll costs have been going on, you may need to also show the agreements. So if you have a lease agreement or something that was in effect prior to February 15, 2020, you may need to show that to your lender just so that they know it was in place at that time. Okay, and one more documentation. Again, records must be kept for 6 years. Now that's 6 years following and starting at the end of your process. So if you get an amount forgiven, basically I would keep your record 6 years after that time. They may call on them at some point. It's subject to an SBA review, or an Office of the Inspector General may also request those documents at random just to verify the amounts. And again, as I stress, good bookkeeping will be important in getting your maximum amount forgiven. Records, most likely, again, I would suggest trying to do everything in a digital format if possible. I believe it protects the borrower and the lender from any kind of lost paperwork, any kind of dispute in the date you turned it in, or the date the lender has 60 days to review the actual documents, and then you always have a copy. I really like the fact that you always have a copy of what you submit, because some people, were just human. Stuff gets lost and stuff gets misplaced, and we need to be able to recreate what we have. The last line is always is anything is any other document the SBA determines necessary. So if they would come back and say that we would like another piece of paper or another document to prove some of the forgiveness numbers, that's just going to be on you to have to supply that document to make sure that everything is on the straight and narrow. There's also at the end with the documentations and on the actual application, there is declarations that you actually have to declare that everything you have submitted is true and correct. Again, really concentrating to make sure that people are submitting these for the right reasons, because there are penalties for obviously misuse, misrepresentation of funds, and the like. I don't believe any of our lenders would like that to come back on them. I know none of our businesses or independent contractors would like to see that happening. And I don't believe that, I hope nobody on this webinar even thought about that, but there are steps in place just to make sure that everything is done on the straight and narrow. Tony, did you happen to find anything?
You know what, they are not in our flow. So we can just park it on the next slide about questions. And if you want to continue to fill us in.
Yeah, I'm gonna do. I got two more slides I'd like to talk about, and one of them is the PPP forgiveness, the actual application. The application along with the forgiveness period. Sorry, the forgiveness period again, like we had talked about before, it's that 8-week, 56-day period starting the disbursement date of your PPP loan. If you had multiple loans by chance, it would be from the first disbursement date. There's also a alternative payroll covered period, APCP, which borrowers with a biweekly or more frequent payroll schedule may elect using during that 8-week period, which would basically begin on the first day of their first payroll period after the disbursement date. Now, again, you're going to get outside of your range of 8 weeks. But here's where they're talking about basically incurred and paid. There's a lot of use on there, a lot of discussion on that. And some people think that they're going to be able to sneak more than 8 weeks into that forgiveness period. And I don't suggest we do that, but I suggest that, and the rule states basically that they're trying to allow for at least getting the maximum 8 weeks in this forgiveness calculator and not try and upset your payroll dates, basically. So if your payroll period, 8-week period ended on the 15th and your payroll is actually the 16th, they're not making you pay it ahead of time. They're saying that's okay, pay it on the 16th because it was incurred during the period. So again, it's really just trying to get the 8 weeks, no matter how it lines up with payroll, to get 8 weeks in their total forgiveness period. Now, semi-monthly users, semi-monthly payers cannot use the alternative. They just have to use the covered period. And I believe during the 8-week time, you're going to get your 8 weeks worth of payroll in there. It might not line up with the exact disbursement date and the end date, but you will get 8 weeks paid within that period of time. And if you choose the alternative payroll covered period, then you must use it where referenced in the application. Otherwise, there's places where it specifically says cover period only. So again, just do not duplicate anything that is paid or incurred because that will distort your numbers, obviously, and you will probably get more than 8 weeks worth of costs in your actual forgiveness, which I believe will come back to haunt you sometime later when they review some of these rules. So I believe that's all I had, and I will bring it back to Tony for any Q&A.
Okay, thank you, Jamie. So at this point, we get to ask our questions continued through chat, where you can ask them live, or our people are ready to answer them live for you. So this is like free advice here. And we've got our team here on the line, so you are free to ask us questions from anything from the gamut of CARES Act, you know, if it's even EDIL or EIDL related, of course PPP like we've been talking about, but maybe even some HR payroll kinds of concerns you're having. So we're just going to take the next time until our questions run out and keep these going. We've had a few people submit some pre-questions, and we've also had some live as we've been chatting. So I encourage you to keep those coming as we go. But if we could go back to some of our first ones here. We've got a question that I usually do our SEP contributions after the first of the year. Do I need to do those contributions now just for the 8 weeks or for the year to date?
It will be easier to track if you did it that way. Otherwise, you should still be able to include those because they're actually incurred during that 8-week period.
Okay. How about when you were talking about the or anything else you want to expand on there, Jamie? Or we're good?
No, yeah, I think so. Again, I realize some businesses do it annually. They do their annual contributions to certain plans. Again, you can pay it during this 8-week period. That will solidify that you actually did do it, and we'll be able to prove it very easily. Otherwise, if you wait till the end of the year, you're going to have to show them in December 31st or January that you actually did pay that for that 8-week period.
Okay. So when you were talking about the non-payroll costs, can we talk about cell phones? So cell phones, if you reimburse an employee for phone charges, do these still work, or does it have to be in the company name?
It does not say anything about having to be in the company name, but it's got to be an actual business expense. So if you're reimbursing an employee $30 a month for their cell phone because maybe they're a remote worker, maybe maybe they're a salesman on the road a lot, I believe you can include that in your non-payroll costs.
Okay, and how about for eligible payroll costs in a religious organization? Are housing allowances included? Maybe like pastor housing?
I apologize. There are some very specific questions for nonprofits and religious organizations. I do not have that right off the tip of my tongue here. Would be more than happy to research that answer and get back to you on that one if possible.
Jamie, this is Bradley Peterson. That was actually one of the frequently asked questions. I think it's question number 32, where it talks about actually housing allowances. If it's considered payroll for that individual, yes, it is considered an eligible expense.
Great, thank you very much. So that is part of his or her, the pastor's payroll, potentially as part of his wage. Okay.
Okay, that's awesome. And yeah, we're able to have anybody on our team chime in too. So let's see, continuing the lines of the forgivableness. How about health insurance and retirement contributions? Are health insurance and retirement contributions calculated against the 15,385 max?
They're not. That is in addition to the 15,385 that is just payroll. That is just gross payroll costs. And then you may add the employer health insurance and retirement on top of that.
Okay, how about an FTEE one? What if the employee does not want to come back to work yet due to impaired health or is simply afraid of coming down with the virus?
Again, then they would basically have turned down the offer. As long as you've documented, you've sent the offer to that employee and they have turned it down, again, you will have to contact your state unemployment and let them know that what is going on, let them know that they turned it down, and that will not count against you for FTE.
Okay.
Back to the last question on the health insurance and retirement contributions.
Yep.
For a self-employed individual, I think you mentioned on one of your slides that that would not be in addition to the 15,385 max, right?
Correct. On the independent contractors, sole proprietor, partner in a partnership, those are the exception. They're exempt from taking any of those or other costs and associating them with payroll with the health insurance and 401k deduction or retirement deduction.
Okay. Let's see. How about, are the health insurance premiums for the owner employee, and maybe you already alluded to a lot of this, health insurance premiums for the owner employee when the employer gets a W-2 and the entity is a sub S, is that forgivable?
I think you're in the same, if you're running them as an employee, but they are the owner, I don't think they're considered an actual, they're considered an employee for W-2 purposes, but not for, trying to find my actual thing right here.
This is Jamie Klein. Yeah, I think you're right on, Jamie. The key thing there is with regards to health insurance premiums, forgivable for the employees for your payroll, but not for the owner, self-employed when using the owner compensation replacement.
Correct. So I believe you do not include their portion in the calculation. Even though they're a W-2 employee, they're still the owner. The owner trumps the W-2 employee.
Okay, so now we've got a matter of timing. If our loan is up next Tuesday, what do we do with not knowing if the Senate will extend the loan periods?
Well, I'm assuming then that at this point they've probably calculated everything up till next Tuesday, and depending on where they sit, if they have other expenses they're thinking they're going to be able to get in, I would just have it ready to go by Tuesday with what we know now. If something changes between now and then, I think you're going to have a forgiveness period there. You're going to have a little grandfathered in more time to prepare that application.
Hi, this is Teresa Carlson, and going on with what Jamie said, I think it would be best for whoever asked that question to also follow up with your lender, because based off of some of the conversations with the multiple lenders who have done the PPP loans, some are saying to hold off until there is more guidance because they don't want to turn in applications to the SBA potentially if all the rules are going to be changing, and that you could give them the information, but they may not process it until they get the final information from the SBA and from Congress. So you may want to follow also up with your lender.
Correct, because now there is no actual deadline or filing date for turning in the actual loan forgiveness application. I know we've gotten questioned on that before too, that, well, do I have 10 days to turn it in or 20 days after my 8-week period's over? And you don't. I would just suggest you do it as soon as possible, at least calculate it. But like Teresa said, if they're going to hold off and they're kind of waiting to see if they answer some of these questions up in the air, I would have it calculated and ready, but maybe talk to your lender and see if they're thinking the same thing, that you should just wait another week or so. But at least if you have it ready, you're ahead of the game.
This is Jamie Klein. I would say good points by both of you. Definitely agree with both of them. Right now, as Bradley talked about early on in the presentation, you've got differences between the House and the Senate bills. You're looking at going to conference committee. They know a lot of these deadlines are happening, so I hope they try to expedite conference committee, but I'm not sure what expedite means in Washington, D.C.
Okay, good point. Should we move on to our next one?
Mm-hmm.
Okay, how about with a farm S Corp? Can I deduct planter rent as custom farm rent?
Under the rules, it says rent or lease of real or personal property. So I believe you would be able to deduct that if that is something used in your course of business. Now, again, you're going to be held to only the 8 weeks. So if you're renting it for the whole year at whatever dollar amount, you might have to calculate that 8-week period costs.
Okay, lots of good questions rolling in. We have an S Corp with 3 partners. Can we use their personal simple IRA contributions and the matched contributions in the eligible payroll?
No, I think we've answered that.
Okay. And And let's see, our disbursement was 417, which was also a payday. Can we use that payroll, or do we have to use the next one?
Again, it depends on it depends on what you are. If you're a bi-weekly or more frequent, or if you're semi-monthly, I would just make sure you get the 8-week period in that forgiveness. Make sure you get the complete 8-week payroll. So if you use the next payroll date, your last payroll date would probably be outside of your 8 weeks, but that's okay, because if it was incurred during that 8 weeks, you're okay to remain on your same schedule. So then you would just include that next payroll, either the one you paid on that date or the one after, as long as you have 8-week period in there.
Okay, sounds good. I'm going to combine two questions here around fuel. If you can go back to the transportation costs that are potentially reimbursed. So fuel costs and transportation, what qualifies? And how much gas used for employees is deductible, like bulk gas for farm?
Yeah, again, like I had said in my presentation, transportation is included under utility costs. Again, kind of a gray area. I know farmers probably have the most at this, especially during this time of planting, that they probably have a bulk tank out there that they've used from, but are trying to calculate how much they've used of that tank. I would say track it. Worst case is track it and put it together. And as long as you can document exactly what you've used, you may get it included. It does say fuel costs, but it does not specifically say what fuel costs. It just says fuel costs.
Okay. How about, let's see, a little bit more confusion on the 8-week period. Is it set in stone, or is there a chance it'll be extended, especially with restaurants that are only doing very limited staff for takeout orders at this time?
Right, and I think that's where the Bradley's update on where it sits in the House and the Senate. I think they're arguing between 16 and 24 weeks. So it's one wants 16, one wants 24. So it looks, for all intentional purposes, it might get increased, but at this point in time, we have to go with just the 8-week period until we're notified of something different or something gets passed by both branches.
Okay. So now between PPP and EIDLs, I received a PPP loan and now I qualified for an EIDL. Should I decrease my EIDL loan amount by the amount of the PPP loan I already received, or what is the relationship between those?
I believe, and Jamie Klein might be able to help me out a little more with this, but I believe the only thing on the actual forgiveness application is just the advance you were given. So if you were given a 1 to 10,000, it was $1,000 per person, up to 10 people max. So it was a maximum of $10,000 advance. That does reduce your PPP actual forgiveness. The actual EIDL loan, if you actually went through after the advance and actually took out a EIDL loan, I don't believe that that has any more bearing on the PPP other than the advance given. Jamie, is that what you're hearing?
Yes, you are correct.
Okay. Another quick one on mileage. Pastor's mileage to be eligible under transportation, is that allowable?
Again, it goes back to probably housing. If that is expected of him or her, if the pastor has to travel, rural Minnesota here, if he has 2 or 3 different churches that he congregates with, it possibly could be included in there if it's part of his, considered part of his pay.
Okay. How about a contract employee who gets a 1099 at year end? We can expand on a situation for them on their forgiveness.
Well, in theory, they would have filled out their own individual PPP loan application and then be subject to the rules of independent contractors, sole proprietors, those types of rules where basically you're going to get your potential wage or 850 seconds of your 2019 wages.
Okay. And we read that you have to exclude FICA from payroll cost. Does that include the portion that comes out of the employee's check, or do you have to apply to exclude the match portion?
That is all excluded. You just are able to take the gross payroll, and that is all you're able to take on that.
Okay, and back to the original PPP application. We applied for the PPP when it first opened up for application, and at the time, I don't believe K1 distributions were allowed to be calculated. Later on, I see they've added that to the allowable amounts to calculate up to 100K. Can we still calculate that on the forgiveness app, even though that wasn't part of the agreement when we first applied?
I would have, at that point, you probably should have went back to your lender and maybe revised your actual PPP application to include that. I don't know if after the fact if you can get that in there, basically you're going to max it out at some point, because if you only applied for a smaller portion of your 2019 and you're claiming way more in 2020, you're going to max it out. You probably would have been better off to go back and try and redo that with your lender, or revise it and then get that included, and you probably would have been better, had a better chance of getting that all forgave in that 8-week period. So I know that's a terrible answer, but I think I would talk to your lender and see what the options are. If there's an option to go back and redo your actual original application to include that first.
Okay. On the forgiveness form, there are areas where it discusses FTEs on 6/30/20. If you know FTEs will not change, can you complete the forgiveness form prior to 6/30/20?
Yes, I believe you can complete it any time as your 8 weeks is up. Again, like Teresa was saying, you might want to err on the side of caution and maybe just hang on another week or two to see where it pans out. But yes, if you know you're, on 6/20, if you know that your FTEs are going to stay where they are, you can surely fill out that application and get it submitted. Again, the biggest thing is if there's any changes coming, that would be more beneficial to wait just a little bit.
Yep, and in addition to that, this is Teresa again, that 6/30/2020 date is out there from a perspective of if for some reason your full-time employees number dipped during your 8-week period, and say that your 8 weeks ends on June 4th, it's giving you the opportunity until June 30th to get that number back up to where it was. So you have that flexibility built into that date. So that's where that date's coming from.
Okay, we had a question, what about S Corp or C Corp owners?
Same thing, they would be considered owners and subject to the payroll cost, the max of 13 or 15,385, and would not have any health insurance or retirement contributions added.
Okay, and given the answer for housing allowance, is there a stipend paid for not taking employer health insurance on payroll? Would this be considered a bonus part of payroll costs or health insurance costs that employer pays?
If the employer paid that to the employee for not taking something, I would say that's part of his wage. That's part of the wage then.
Okay, is all employer paid health insurance expense included in the non-payroll?
Sorry, say that again.
It says, is all employer paid health insurance expense included in the non-payroll?
Yes, for that 8-week period, you would include your employer contributions to health insurance.
Okay, and if an employee was released during the 8-week period due to poor performance that began prior to their 8 weeks, will that reduction of payroll count against you?
No, it will not. If they were relieved of their duties for cause, and you have that documented that they're just lack of performance or just did not work out, you should be okay. You will still include that as an FTE during your 8-week forgiveness period.
Okay, speaking of FTEs, are owners included in FTE calculations?
No, I don't believe they are.
Okay. Is an EIDL loan required to be paid off with a PPP loan if the use of proceeds of the EIDL loan are for the purposes other than the eligible PPP loan purposes?
Again, I think we're talking two different loan processes. Again, I believe the only thing that the PPP forgiveness deals with is the advance of the EIDL, which does not affect if they took out an EIDL loan and have a PPP loan, two separate loans, and the money for the PPP loan should have been used for payroll and non-payroll costs. And the EIDL loan, if there was one taken, that theoretically should be paid out of business funds as the terms allowed on that.
Yep, I fully agree. This is Jamie Klein. There really early on, there was the opportunity to refi some of the EIDL loans into a PPP, but I don't think that really affects this for the question.
Okay, well, if that's the case, then we'll move on. So we are an S Corp and pay health insurance for owner and spouse, who's also an employee, but not other employees. Does that mean that only the spouse's insurance is eligible for payroll cost? We write a check to the owner and spouse, not the insurance company.
Then it depends on how they're classifying that payment, I guess. If they're classifying it as an owner draw, and if the wife, yes, she may be an employee, but she may also be an owner. We need a little more information possibly on that.
Gotcha. So you're available for contacting later, right?
Mm-hmm. Yep.
Okay. And if you're an S Corp and the owners are still considered an employee, can their wages be included in the payroll cost? I know we've kind of gone around on some of these, but we'll take that one again.
There is a separate line where owners would be. There's a separate line in the actual application where owners will be filled in. They are not included with the employee costs.
Okay. Can I prepay July rent and July employee health insurance?
Again, health insurance, I would probably discourage against. There is nothing in the rules at this point that says you cannot prepay for rent. Again, I just make sure that you're confident in that you're doing that for the right reasons, and that if it does come back, you got to at least be willing to stand your ground or to pay it back if that's the case.
Okay. And how about travel-related expenses for employees? And if so, is that capped at the $100,000 threshold?
That was travel expenses?
Yep, it was travel-related expenses for employees. So I don't know if that means like their vehicles or if they
If anything, you would have to document that and try and include it in transportation costs. But I think that's a pretty gray area. I think you're gonna have a tough time maybe getting that one to flow.
Okay, sounds good. And I don't know if you guys, there's a little bit of thunder happening outside. I know that some areas are experiencing bad weather, so hang with us. The power's still on. I hope yours is too. Let's see, we have a business loan for inventory. Can the interest of this loan be included as a non-payroll cost?
I would believe if that's considered property, if your inventory is considered your personal property, you might be able to get the interest of that loan included in the 8 weeks. Just calculated for the 8 weeks.
Okay, and for a corporate farm operation, is land rent included and divide payment 52/8?
That's what I would probably say is going to be the best opportunity to try and claim that. I know a lot of people, a lot of the farmer operations, you know, pay early in the year, pay for the whole year worth of rent. So a lot of them, even during this 8-week time, is probably when their big rent checks went out to rent land. But yes, you're gonna have to prorate that to just the 8-week period of time.
Okay, we use Modus for our employees that get set reimbursement each month for use of their personal vehicles, vehicle and company business. Would that be a deductible wage?
Again, potentially under transportation would be the only place. You're just going to have to make sure you document that and include it in there.
Okay, and where do we find the PPP forgiveness calculator again?
AICPA.org has an actual calculator, forgiveness calculator in it that is fairly user friendly, and it's just got some fields to fill in, and then a lot of examples and notes. Otherwise, the actual application, you can work your way through the actual application on there too, with some calculations and some notes. And that's on the SBA.gov website.
Gotcha, and I believe it's also out there under our resources page.
Okay.
Yes, if you go to www.christianson.cpa.com, you'll also find it under our COVID resources.
Super, okay. And we have another company, it says, we reimburse employees for their vehicle use through a company Modus. Is that expense allowable? And we had that one earlier, but okay. Once forgiveness happens, how will the amount be listed on financial statements?
Great question.
Okay, this is Teresa. At this point, what our recommendation has been is that it's going to be, from a GAAP perspective, that you're going to have to record it as debt forgiveness income, so you have the debits and the credits right, or that it's going to be an offset to your expenses. It seems cleaner to put it into a debt forgiveness versus offsetting your expenses, so you still have a true comparison going forward. I know it's not taxable, and I know that there's a lot on the tax side as far as if you can take those wages then as deductions, and that's still all being discussed as well. So originally, or what we're currently saying, is that it's going to be an offset and recorded as debt forgiveness income.
And I would agree that that makes sense to have it in one location. That way it's just easy for, if it is a tax issue, that it can be picked out very easily and taken off of there.
Okay, excellent. As we all know, loans over $2 million are going to be audited by the SBA, but what are your thoughts on auditing for loans in the $1 million range? Maybe we have a couple of our team members who want to take a stab at that one.
Yeah, I just know that anything over 2 million is almost a guarantee, they said. And I would hard pressed to believe that they're gonna look at quite a few of them under that 2 million also, just to make sure that it's consistent across the board.
Yeah, I would agree, Jamie. With the sheer number of these, it's going to be interesting to see how many they do look at over the upcoming period of time. As of the last few FAQs, they have reserved not the last few FAQs, but the two interim final rules that came out on the Friday night before the holiday weekend. They did reserve the right to look at any size PPP, but we have the additional guidance that was included there that essentially you're fine under the 2 million. Again, at the end of the day, you might want to have, if you have concern in this area, please have some documentation provided on how you're affected by COVID. And if you'd like some assistance in putting that documentation together or to bounce some ideas, we're definitely available to do so.
Yep, I agree. So I really don't have a percentage, but I believe they will look at a few of them under that 2 million.
Okay. Let's go back to a couple more questions. It looks like we do have a few more. And can I include interest payments made on a line of credit loan?
No, I don't believe a line of credit loan will qualify as real or personal property.
Okay. Does mortgage interest need to be prorated for the 8 weeks also?
Yes. Yes, it does. It just needs to be, you can either prorate it or the whatever was paid during that 8 week period of time. Their chances are there's 2 months that would be paid. And so you'd have to prorate it or calculate those interest amounts.
Okay, and we're going to go back to smooth out a question here. On the PPP loan forgiveness application, there are 4 lines for payroll and non-payroll costs. So line 1 states enter payroll costs. And on that line, do we use all employees and owners gross pay up to 100,000?
You do not use owners in that calculation. I believe owners are on a separate line. I'd have to double check that, but I believe owners are on a separate line.
Okay. And so I've got a couple more EIDL questions that were queued up to us before the webinar started by some attendees that were coming. Is the EIDL advance taxable?
I don't believe, again, I don't believe either one of these are a taxable event. From everything I've read states the PPP and I would assume the EIDL, since they're a little bit commingled, especially the advance, since the advance relates to the PPP, that is a non-taxable event as far as income goes. Now, you will not be able to take the deductions, I believe, on the items you paid for with the forgiveness, but that again is some tax clarification we're waiting for.
Okay, I'm going to expand on it a little bit more. If you received an EIDL emergency advance, say 3,000, is that advance taxable, or does it reduce your deductible business expense? Does it impact calculations for PPP forgiveness, and if so, how? So lots of questions inside a question.
Yeah, it does reduce your forgiveness amount on your PPP loan. And there was a second one in there.
Yeah, also deductible expenses. Can you?
Again, that's everything I've read so far states that. So if you use that, the forgiveness, obviously to pay payroll, rent, utilities, whatever, to my knowledge, those then would not be deductible as a business expense. The income or the loan would not be taxable as income, but you cannot take the expenses also since you took the loan.
Gotcha. And I want to go back to our person with the question on the application, looking for the owner line, and they're not seeing it. So maybe we just need to reach out individually and follow up later. We would be happy to do that.
Yeah. Again, on the PPP Schedule A worksheet, I think that's going to help you with getting those lines, because that's got employers compensation to owners listed on a separate line. Looks like it will flow through to your payroll costs, but it is on a separate schedule.
Okay. I've got another, let's see, if one has 1,700 of PPP funds that haven't been spent and deadline's Friday, what are recommendations for spending in order to get forgiveness? For example, should I pay July medical insurance premiums by Friday? Should I prepay July rent, prepay any July utilities?
Well, again, I'm probably not gonna give advice and tell them to spend it all. But again, doesn't look like there's any guidance or any rules that prohibit you from advance paying on the rent.
Okay.
If you so choose to do that, just make sure that you're aware of if you do that and it doesn't qualify, that may have to be, adjusted.
Gotcha. Yes, and we have a question, copies of the slides, and that brings up a really good point. Yes, we will be getting you all copies of the slides, as well as a link to the webinar should you want to share it or listen to it again in case you missed something. Those will be going out tomorrow. You should see it in your inbox about 3 o'clock. And we'll post it on our website as well. Any other last questions as we start to wrap up? You know, one of the popular ones we've had, if I could go back to an HR question real quick, is what are steps I should take if an employee tests positive for COVID? We get that one here sometimes.
That's a great question. This is Christy Hafner. I'm the Human Resources Manager here at Christianson. And I would tell you there's some really good guides out there to use. A couple in particular that I would recommend would be through the Minnesota Department of Health. They have a really nice one-page guide titled COVID-19 When to Return to Work. The hotline through the Minnesota Department of Health is very good information. And then also the CDC, if you look at their website, has some really good information. I'd be more than happy to talk through it with anybody too if you're looking for some more specifics, but they give some pretty detailed information there about some baselines that are recommended to follow, and I would use those as a guideline and as a minimum when you're looking to put your policies and procedures in place.
Hey, thank you, Christy. Another question came through on, would you suggest using extra payroll PPP funds to pay bonuses?
Well, there's the slippery slope. I have seen again the rules out there state that you can, you know, pay your people COVID bonuses, hazard pay, whichever you want to call it, and actually include it in payroll. But then on the same side, I have seen some rulings and heard through other sources that don't pay out bonuses just because you have extra money. That is not the intent of the actual PPP loan, is to try and burn it all. Now, if you can max it out, that's great. So I would err on the side of caution. I believe employees that work through this actually do deserve something. They have really adapted to how the world is becoming. So it's not out of the question to give these people extra pay or bonuses, but just be careful that you're not doing it just because you have extra money. If you can justify that you would have given them a bonus out of the business because they work through this, then I would say you're okay with that.
Okay, sounds good. You know what, I also had this question from a friend the other day who said, can I give my employees raises during this time frame too? That they were hesitant to do that. Is that still allowed?
It is. You can surely increase wages at any point in time. You just have to make sure you document why you did it, if it's performance based or seniority or whichever the case may be. I would just make sure you document it. And then just be aware that obviously that's going to follow through to your expenses the rest of the year. You know, as long as you're willing to make that commitment, then I think you're good.
Okay. Well, I see our questions are somewhat wrapping up here, but I know that we are always available, especially as you dig deeper into that application and you have questions, because it can be an intimidating number of pages, but we are here for you. So I'm going to give our speakers a chance to add any last words, and I'm going to put your contact information up too so they know exactly how to get a hold of you.
Okay.
Only I went past it. There you go.
Right. Bradley, you have any last minute words?
No, I think I'm good. I'm just looking forward to again hearing more questions and you know, getting some answers to some of these very good questions that we had today. Very good questions.
Okay. I would concur on that and agree that some very good questions. I know some of them are very detailed, and I hope we did our best. Try not to give really vague answers, but as we know it today, we tried to get the best answers that are available. So I appreciate everybody taking the time out to listen to our presentation, and yeah, feel free to reach out to any of us if there's follow-up questions.
Okay, well, thank you to our participants, thank you to our team, thank you to the bankers who also helped get clients on the call today to answer some questions. And we just really appreciate you all, and thanks for helping the economy through this difficult time. And you really do help drive that economy. So thank you again. And we look forward to more conversations in the future. Keep watching our emails and our website, because that's where we're going to continue to push information out to you as soon as we have it. With that, hope that the weather treats you well.
All right, thank you, everyone.
Thanks, guys.